The relational database model by Edgar F. Codd originally proposed the principle of the relational model in the late 1960s. The formal model has its foundation in the relational algebra and set theories, which provide the theoretical basis for most of the data manipulation operation used. For a purist point of view, a fully relational system is one that conforms to 12 stringent rules that Code outline. As practical manner, however, not all the code rules are equally important. Some are critical, but some are not. Other theories therefore propose less rigid requirements for assessing the relational standing for a system. So, according to a system, is relational if first the representation data is a form of two-dimensional table such as database table called customer, and second if it support the relational algebra function of restrict and project and join. So you can see here the relational table called customer. The table name is the customer, and you can also see the customer number, name, address, and the current balance. In their first column is the equals or the record. It is their unity numbers, so they will not have two or more records for one customer, and also to avoid mistaken identity. The relational database concept. So this is the relational algebra functions, the restrict, project, and join. We can use this in designing small database from scratch. So in join, we can see that there are relation between data. Entity, occurrence, and attributes. An entity is anything about which the organization wish to capture data. Entity may be physical such as inventory, customer, or employee. They may also be conceptual such as sale, account receivable, or account payable. System designers identify entity and prepare a model of them like the one presented here. This data model is the blueprint for ultimately creating a physical database. The graphical representation used to depict a model is called an entity relationship diagram. As a matter of conversion, each entity is a data model is a name in the singular noun form such as customer rather than consumers. Term occurrence is used to describe the number of instances of records that pertain to a specific entity. For example, if an organization has 100 employees, the employee entity is said to consist of 100 occurrences. Attributes are data elements that define an entity. For example, an entity may be defined by the following partial sets of attributes: name, address, job skill, year of service, and hourly rate of pay. Each occurrence in the employee entity consists of the same type of attributes, but value of each attributes will be vary among occurrences because attributes are the logical and relevant characteristic of an entity. They are unique to it. In other words, the same attribute should not be used to define two different entities. Associations and cardinality. The label line connecting two entities in a data model describes the nature of the association between them. This association is represented with a verb, such as keeps, request, or receive. Cardinality is the degree of association between two entities. Simply stated, cardinality describes the number of possible occurrences in a one table that are associated with a single occurrence in a related table. For example, of cardinality are possible 0 and 1, 1 and only 1, 0 or many, or one or many. These are combined to represent logical association between two entities. The value of the upper cardinality at each end of the association line define the association. For example, A cardinality at one end and A cardinality at the other is the association. So here are the examples. So first example, assume that a company has 1,000 employees but only 100 of them are sales staff. Assume also that each salesperson is assigned a company car, but non-sales staff are not. Example 1 in this figure show that for every occurrences or record in the employee entity, there is a possible of 0 or 1 occurrence in the company car entity. When determining the cardinality value in an entity association, select a single occurrence or record of one entity and answer the following question. What are the minimum and the maximum number of records that may be associated with a single record that has been selected? For example, selecting an employee entity record and looking forward the company car entity. We see two possible value of the selected employee record is the salesperson. Then he or she is assigned one and only one company car. This particular employee record, therefore, is associated only one record in the company car entity. If, however, the selected employee record is that of a non-salesperson, then individual would be assigned to no car. The employee record is a case is associated with zero company car records. Thus, the minimum cardinality is 0 and the maximum cardinality is 1. A single and a short line intersecting the line connecting the two entities this speak this degree of cardinality. Notice that from the employee entity perspective, cardinality is shown at the company car end of the association line. Now, select a company car record and look back at the company entity because each company car is assigned to one employee, but minimum and maximum number of associated record is one. Two short intersection between at the employee end of the association line signify this cardinality. So for the second one, it illustrates a situation in which each record is one entity is always associated with one record in association in entity. In this case, each company laptop computer is assigned only one manager, and every manager is assigned only one computer. Two short lines intersect the connecting line at the both ends to see this cardinality. So now we have the example 2. So example 3 present the relation between customer and sales order entity. Notice that the minimum order of sale record per customer is 0 and the maximum is many. This is because any given period of which sale entity pertains a particular customer may purchase have nothing or purchase several times. From a perspective of sale order entity, however, many record is associated with one and only one customer. The cowfoot symbol, which is give this form of notation its name. The fixed at many cardinality at the sales order and of association line. So example 4 represent a situation in which each specific item of inventory is supplied by one and only one vendor, and each vendor supplies one or many different inventory items to the company. Contrast this association with example 5, the next one. So for the last one, this illustrates the many-to-many association. We again use the vendor and inventor relationship in this example. This time, however, the company has a policy of purchasing the same types of inventory from a multiple supplier. Management may choose to do this to ensure that they get the best prices or to avoid becoming dependent on a single supplier. Under such a policy, Each vendor record is associated with one or many inventory record, and each inventory record is associated with one or many vendors. For example, 4 and 5 demonstrate how cardinality reflects the business rule in place within organization. The database designer must obtain a thought-through understanding of how the client company and specific users conduct a business to properly design the data model. If the data model is wrong, and resulting database table will be also wrong. Example 4 and 5 are both valid but different options. And as we shall see, require different database design. Alternative cardinality notations. The cardinality notation technique shown in previous slide is called Raufoot. An alternative method is to write the cardinality value in each end of the association line connecting the two entities. Some database designers explicitly show both the upper and lower cardinality value. Some choose to shorthand version that note only the upper cardinality. The next one is the physical database table. The physical database table are constructed from the data model with each entity in the model being transformed into separate physical table. Across the top of each table are attributed forming columns, intersecting the column to form a row of a table or applets. A tuple, which Code gave precise definition when he first introduced it, corresponds approximately to a record is a flat file system. In accordance to the conversion, we will use term according or occurrence rather than table. The properly designed table possesses the following four characteristics. So the first characteristic is the value of at least one attributed in each occurrence or row must be unique. This attributed is primarily key. The value of each attributed is the row need not to be unique. The second one is all attributed value in a column must be the same class. And the third one is each column is a given table must be uniquely named. However, different table may contain column with the same name. And the last one is the table must conform to the rule of normalization. This means they must be free from structural dependency, including repeating groups, partial dependencies, and transitive dependencies. Linkage between relational tables. Logically related tables need to be physically connected to achieve the association described in the data model. Using foreign key accomplished this as illustrates the previous table. In this example, the foreign key are embedded in the related table. For instance, the primary key of the consumer table or the cost num or customer number is embedded as a foreign key in the both sales invoice and the cash receipts table. Similarly, the primary key of the sales invoice table or the invoice number is an embedded foreign key in the line item table. Note that the line item table uses the composite primary key to comprise the invoice num and item num. Both fields are needed to identify each record in the table uniquely, but only the invoice number portion of the key provides the logical link to the sales invoice table. Foreign key are not always embedded in those in the previous slide. The nature of the association between the related tables determine the method used for assigning foreign keys. These methods are examined later. This foreign key in a place, a computer program can be written to navigate among the tables of the database and provide user with the data they need to support their day-to-day tasks and decision-maker responsibility. For example, if a user wants all the invoice from customer 1875, the program will search the sale invoice table for record with a foreign key value of 1875. We see the from the figure 9 or 12 or from the previous slide that there is only one such occurrence invoice number. 1921 obtain the line item detail from the invoice, the program searches the line item table for records that the foreign key value of 1921, and those records are retrieved. User views. A user view was defined earlier as the set of data that a particular user sees. Examples of user views are computer screens for entering or viewing data, management reports, or source documents such as invoice. Views may be digital or physical, but in all cases, they derive from underlying database tables. Simple views may be contracted from a single table, while more complex view may be require several tables. Furthermore, a single data may be contribute data to many different views. A large organization will have thousands of user views that thousands of individual tables support. The task of identifying all views and translating them into normalized table is an important responsibility of database designers that has internal control implications. The issues and techniques related to this task are examined in anomalies, structural dependency, and data normalization. This section deals why database table need to be normalized. In other words, why it is necessary for the organization database to form an elaborate network of normalized table linked together like those illustrated in Figure 9-12. Why? Instead, we cannot simply consolidate the view of one user or even several into a single common table for which all data need may be met. In data anomalies, the answer to the question in that improper normalized table can be caused the DMS, processing table that restrict or even denies users access to the information they need. Such tables exhibit negative operational symptoms called anomalies. Especially those are updated anomaly, the insertion anomaly and the deletion anomaly. One or more of these anomalies will exist in table that are normalized or are normalized at the low level, such as first normal form or second normal form. Free from anomalies table must be normalized to be the third normal form level. We will demonstrate the negative impact of the anomalies with the user view in this figure 9-13. This inventory status report would be used to provide a purchasing agent with the information of an inventory item to be ordered at the various suppliers or vendors of this item. If this view were to produce from a single table, it would look like similar to one presented in the figure 9-14. While such a table would indeed store the data to process the view, it will exhibit the anomalies mentioned above. Dated anomaly. The updated anomaly result from the data redundancy in an unnormalized table. To illustrate, notice that the suppliers number 22 provide each of the three inventory items. The part number 1, 2, and 3 show in the figure 9-14 or in this table. The data attribute pertain to the supplier number 22. The name, address, and the telenumber are thus repeatedly in every record of every inventory item from supplier's number 22 provided. Any change in the supplier's name, address, or telephone number must be made to each of those recorded in the table. In the example, this means three different updates to better appreciate the implication of the update. Anomaly consider a more realistic situation where a vendor supplied 10,000 different items of inventory. Any update to an attribute must be made 10,000 times. Insertion anomaly. To demonstrate the effect of insertion anomaly, assume that a new vendor has entered the marketplace. The organization does not yet purchase from the vendor, but may wish to do so in the future. In the meantime, the organization wants to add the vendor to the database. This is not possible. However, because the primary key for the inventory table is part num, because the vendor does not supply the organization with any inventory items, the supplier data cannot be added to the table. And for the deletion anomaly, the deletion anomaly involved the unintentional deletion of data from a table. To illustrate, assume that supplier number 27 provide the company with only one item, the part number 1. If organization discontinues this item of inventory and delete it from the table, the data pertaining to supplier number 27 will also be deleted. Although the company may wish to retain the supplier information for the future use, the current table design prevents it from doing so. The presence of deletion anomaly is less conspicuous but potential more serious than the updated and insertion anomalies. A float database design that prevent the insertion of record or require the user to perform excessive data attract attention quickly. Deletion anomaly, however, may go undetected, leaving the user unaware of the loss of important data unless it is too late. This is the result of an intentional loss of critical accounting records and the destruction of audit trails. Table design, therefore, is not just a operational efficiency issue, it's carry international control significance that accountants need to recognize. Normalizing table, the database anomalies described above are symptoms of structural problem with table code deficiency. Specifically, these are known as repeating groups, partial dependencies, and sensitive dependencies. The normalization process involves identifying and removing structural dependencies from the tables under review. The result table will then meet the two conditions below. First, the non-key data. Attributes in the table are dependent on the primary key. And the second is all non-key attributed are independent of the other non-key attributed. In other words, a 3NF table is one in which the primary key of the table wholly and uniquely define each attribute in the table. Furthermore, none of the table attributes is defined by the attribute other than the primary key. If any attributes violate this condition, they need to be removed and placed in a separate table assigned an appropriate key. Upon examining the figure 9-14, we will see the primary key part num does not uniquely define the non-key attribute with the supplier's num number, name, address, and telenum. Instead, each unique primary key value is associated with the multiple repeated group value for this non-key attribute. To resolve the structural dependency, the repeating group data must be removed from the inventory table and placed in the separate table, which we will call supplier. Figure 9-15 show the two 3FN tables. Inventory suppliers along with the third table called part supplier, which link the two. This link technique will explain later. Normalization, the data has eliminated the three anomalies first. The updated anomalies is resolved because data about each supplier exists only one location. The supplier table may change in the data about an individual vendor in made only once, regardless of how many items it supplies. Second, the insertion anomaly no longer exists because new vendors can be added to the supplier table, even if they are not currently supplying the organization with inventory. So, for the example, supplier number 30 in the table does not supply an inventory item. Finally, the deletion anomaly is eliminated. The decision to delete an inventory item from the database will be result in the unintentional deletion of the supplier data because this data reside independently in different table. Linking normalized table. When unnormalized table are split into multiple VNF table, they need to be linked together via foreign key, so the data in them can be related and made accessible to user. The degree of association or joint cardinality between the resulting tables that is 1 and 1 or 1 and many or many and many. determine how the linking occurs. The key assignment rules for liking table are here. So the keys in one and one association where a true one and one association exists between tables. Either or both primary key may be embedded as a one foreign key in a related table. On the other hand, when the lower cardinal value is zero, a more efficient table structure can be achieved by placing one side table primary key in a zero or one table as a foreign key. So So in the key in one and many associations, where a one and many association exists and primary key of the one side is embedded in the table of the M side. To demonstrate the logic behind this key assignment rule, consider two alternative business rules for purchasing inventory from a supplier. The business rule here is each inventory supplies the firm with three or fewer different items of inventory, but each item is supplied by only one vendor. This is unrealistic but technically possible. This rule describes an upper hand bounded in one and many association between the supplier and inventory table. In the second business rule is each vendor supply the firm with any number of inventory items, but each item is supplied by only one vendor. This is true in one and many association in which upper limit of the many side of association is bounded. For instance, the vendor may supply one item of inventory or 10,000 items. Key in many and many association. To represent the many association between table, a link between need to be created. This link table has be combined or composite key consisting of primary key of two related tables. The business rule is each vendor supplies the firm with many number of inventory items and each item may be supplied by any number of vendors. Accountants and data normalization. Database normalization is a technical matter that is usually the responsibility of system professionals. The subject, however, has implications for internal control that makes it the concern of accountants also. For example, data anomaly can generate conflicting and obsolete database values. The insertion anomaly can result in unrecorded transaction and incomplete audit trails. And that deletion anomaly can cause the counting records and destruction of audit trails. Although most accountants will not be responsible for normalizing an organization database, they should have understanding of the process and be able to determine whether a table is properly normalized.